Hello everybody and warm welcome to another wonderful video of the Credit Card Life. My name is Amit, and with the help of this video I want to talk about one of the most requested request on my credit card channel platform, and the request is the difference between a credit card and a charge card. So I want to talk about those particular two differences and probably the history of how the charge card or even a credit card got started on planet Earth. Let's begin. So the industry, so-called the credit card industry, started way back in 1950 when two individuals from the United States, so-called the Ralph Schneider and of course Frank McNamara, were visiting a diners, a motel, kind of a place where they eat for food. Unfortunately, they forgot to carry their wallet. That particular moment, they somewhat got bailed out because the better half of Frank came into rescue and he was able to pay the bill and go home. Post to that, these two gentlemen thought of creating a business of a credit card, and that's where the first ever Diners Club charge card got into business, and that's how the entire history of credit card and charge card started. Initially, it was just a charge card, and then a lot of companies talked about credit card business as well. So that's how it all started. Now, the basic question which we all have with context to the credit card versus charge card, is there a difference? What are the key metrics? Let's talk about it. Number one, credit card is something which we all know, and I'm sure many of you already know this, have a defined limit. When I say, we mean to say is credit card limit. Let's say you have a card wherein the limit is 4 lakh rupees. That's a credit card. On the contrary, a charge card has no set benchmark as such. You may have a charge card initially with 50,000, 2 lakh, 3 lakhs, and it keeps on moving back and forth depending how you spend and how you use the particular transaction. So the charge card has no set limit, but it keeps on moving. And if you happen to have a charge card for more than 6 months and you pay off your debts on time, you can have a very sumptuous amount, even better than credit card with the charge card, in case if you're able to maintain it. So that's one of the advantages. Number two, credit card limit can only be defined by the help of a shadow limit transaction. So for example, if you happen to have gold charge card, go to a spending limit page and check shadow limit, right? 3 transactions, let's say 1 lakh, 2 lakh, 3 lakhs, 3 times in a day, and see if it's approved. If it's approved, that means that is the current limit of your charge card. All right, that's how you find out the limit of your charge card. Moving towards the next point, the 5% amount due on credit card, and on charge card there is no such transaction. Now I mean to say, whenever you buy a credit card, you spend, you get so-called 5% minimum due which you have to pay off the entire bill, and if not that, if you have enough money, pay your entire bill. That's credit card. Charge card, it's kind of whatever you have used in a particular month, you're bound to pay the entire amount. In case if you fail to pay, there are going to be charges, there are going to be blockage, and you may not be able to go ahead and probably use your charge card. So that's one of the kind of drawbacks you have with the charge card. Number three, interest rates are relied or kind of levied pretty heavily on credit card. Most of the credit cards in India have a very hefty interest rate, whereas the same interest rate can be waived off if you pay on time. On the contrary, in charge card, there is no such provision of so-called interest. But if you have failed, let's say with the help of late payment or defaulted, then the charges are quite heavy and you may not be able to get a charge card going forward as well. Point number 4, annual fees. Annual fees are there with both the cards. Normally, charge cards, if it's a metal card of any lender, tend to be on the higher side compared to a plastic card. So annual fees kind of goes a little higher on the charge card compared to a credit card. Let's talk about the charge card impact on CIBIL. That's a very important point. You must understand, a charge card can do wonders on your credit card because you pay 10 rupees and you use 10 rupees. So your transaction is 100% complete with no overdue or no left behind on any of the credit card or let's say charge card transactions. On the contrary, in the credit card, if you're not able to pay on time and you pay some amount, that can go bad against your credit history. So charge cards are more beneficial, just as FD cards are compared to a credit card. Let's talk about the approval rate. You've often heard me saying that first apply for a credit card, then go for a charge card, and then for a credit card. That's how I recommend people to buy a charge card in American Express. The logic is this: whenever you're going to buy a charge card, more often than not, the lender checks your history on payment. If it's full, not an issue. On the contrary, if it's delayed or minimalistic or partial payment, the chances of getting, let's say, charge card is kind of difficult in most other charge card situations. Well, that's it. This is all I wanted to share about credit versus charge card. I hope the history, what I've revealed, is somewhat helpful. Do note the history points which I've revealed at the very beginning is being taken from American Express website, and I've also spoken to Amex about the history of credit cards, and they were very kind enough to tell me about what these changes and how it all started. So if you pay attention, most of the credit cards got started because of the help of Diners Club, and later American Express and Bank of America, all these companies got into action. So the founding father of a credit card should be given to the Diners Club membership. You have a good day, and thanks for watching.